Good day to everyone. This is Dr. Sivaraman of iknowindices.com. Let me display the PowerPoint presentation. Tracking the forex market together part 2. So I gave the first part of this webinar between 9 and 9:45 GMT during the European session, and I'm going to review what are the calls I have given and what happened to those positions. So what positions we decided, on what basis we decided to take such positions, and what happened to those positions I'll explain. Then also we will review the market in relation to that of any new high or new low formed during this particular day, comparing with that of the initial lows and the highs set between 2:30 and 3:30 GMT or during the Japanese session, and that is used as a reference level by the players for them to handle the traders' positions. So we also try to follow the same and try to understand what they intend to do. Then later on, we will decide with regard to the trades what we can do during the European session. So let me just explain to that of the positions taken during the European session and what is the fate of it. So Euro, we decided to take a buy position because the focus was expecting the rise of the spike, but the spike did not happen, but there was a rise happened during that particular European session. So we decided to take a buy position because before that they made a downward stop and then subsequently they were holding above that of the initial low. So we decided to take a buy position, then kept 30 pips hedging order to limit the risk, and the hedging was not filled, and subsequently it was closed around 39.63 with 50 pips profit. Then GBP again, a buy position was taken around 56.89, and that was the prevailing low at that time with a 30 pips hedging order, and then it was closed around 57.24 with 35 pips profit. Now again they have come below that of 1.57 area. So you have to understand every session they will try to make swings or volatile moves and then only try to gain the levels. They will not be able to gain the level continuously. In that case, what will happen? All the traders will try to take the buy position and the players will not be able to make any money. So ultimately the players intend to make money and their intention is to rise the levels, but in between we will come across volatile moves. So that we need to handle it without any fear. There comes our skill set to read their intentions from their market moves so that we don't become panic while trading, because once you become panic or greed, then we tend to do distressed trades and we miss the opportunities as well. Then in the case of CHF, I kept a buy limit order 97.20 that was not filled during the webinar, and subsequently they came down and that was filled, and still the hedging order is there. I was not able to book the profit, and I was explaining that they have been making the contrarian move. Even now in the live market quote page, you can see, I can give the link for the live market quote page. You can open it in a browser and see that even now Euro is showing positive net change and CHF is showing positive net change. So they are slowly handling Euro CHF. As a result, they gained about 66 pips in the case of Euro CHF. So only when they make positive net change in the case of Euro and positive net change in the case of USD CHF, you come across this sort of move. That is why I was recommending buy Euro as well as do the buy and sell trade in the case of USD CHF. Now we are able to understand why we decided that way. When according to their intentions, we have to try to take the positions rather than we try to think always whenever Euro goes up, the GBP will come down and things like that. And I come back to the slide. Then in the case of Australian dollar, I kept a limit order 97.80 that got filled and then subsequently did not go further down, and 98.35 I was able to book profit of 47 pips. Then in the case of Canadian dollar, 1.0280 because it was above that of the high, initial high, so I decided to take a technical trade of buy above that of the initial high 1.0280, and still I kept the hedging order to limit the risk, and it came down. And Canadian dollar is known to make such moves, wild moves. So if you are trying to trade in Canadian dollar, it's wise to use the hedging. Either way, you will be able to book profit. And I kept the hedging order 30 pips below 1.0250, and that got hedged. Then subsequently, Canadian dollar cut the low also. 1.0237 was the initial low, and that was breached, and it came down to 1.0226, and then started coming up above that of 1.0235. There it was closed. The hedging was closed with 15 pips profit, and another new entry stop is being placed at 1.0205, and now I can slowly move it because they have come up to that level of 1.0244. Then I can maintain 30 pips from the current market level and make it as a trailing hedging order. Once the position makes profit at 1.0280, I can keep stop at entry. Now you come across a question that we have earned about 15 pips on the downside, and when it goes up, on the upside we can even accept a loss of 15 pips if the going is no good. So that is the advantage of using the hedging. Or in case if they suddenly drop further down and hedge you again, then you can simply close your buy position and try to earn out of the sell position. So these are all the advantages of using hedging, but at the moment US platform, they are not offering the hedging. The alternative is try to use the crosses for the hedging. Suppose you are trying to take a buy position in the case of euro, then wherever you come across euro as a numerator, say for example euro GBP, there you can try to keep a sell order 30 pips below the market. Don't immediately take the position. You try to keep a sell order below that of the current market level. Say for example I am buying euro 1.3933, then euro GBP is currently trading around 0.8880. So I'll keep a sell limit order or a stop order at 0.8850 when I am taking a buy position at 1.3932. So if the market goes up, I am not hedged in the case of euro GBP. So I will only keep the hedging order to limit the risk. If the market goes up, I'll keep stop at entry in the case of euro, then subsequently remove the stop loss sell order in the case of euro GBP. And that way, if you try to do it, in case if they suddenly drop euro, then you will be, the euro buy position will be making loss, but the sell position in the case of euro GBP will be triggered and it will start making profit. So in that case, you will find that your usable margin is not unnecessarily eroded. So that way also you can use the hedging, but only thing is you have to give the margin for the buy position in the case of euro and also sell position in the case of euro GBP. That will be the only constraint, but still that will limit the risk. So limiting the risk in the market is very, very vital. And you know that Tuesday they made a very quick drop and Wednesday they made the rise. And in such eventuality, if your hedging is used, you will not be hurt badly. Because when they dropped about 300 pips, obviously anybody will think that unfortunately I had traded without a stop and now it makes a very big loss. What do I do? So that question will be lingering in the mind unnecessarily. So if you use hedging just to limit the risk, then it will work very well. And in the case of euro GBP, I kept a sell order, and that got subsequently, that was 4 pips short of the high, 88.78, and that got filled, and subsequently they formed a new high in the case of euro GBP, 88.87, and currently holding around 88, 81, 88, 84 level. So the hedging is not being filled, and I will continue the trade of Euro GBP sell position with regard to the US session, and also Canadian dollar and the Swiss franc positions to that of the US session. The other positions are all closed, so I can review and take fresh positions for the US session. So this is the fate of the trade what I decided. Let me show the slide pertaining to the initial lows and the initial highs. Now in the case of Euro, 1.3890 was the initial low. Still, Euro has not gone below that after the initial drop during the European session. Still, it is holding around 1.3934, 1.3936, just 10 pips below that market. We can keep a buy limit order and see how exactly they are filling it. It is not filled for about 30 minutes because already 30 minutes has passed from the start of the session. So if you wait, then probably they may fill during a small swing. Otherwise, we can try to take it at a higher level also. We know that they are taking it up. So then there is no problem of taking it slightly at a higher level. So our reference level is 1.3890, and so we are not developing an uncertainty and whether it is around that of the support or whether it is breaching the support, whether the candle formation is perfect and things like that. So here it is a question of a simple reference, what they are using it. You know, the richest people, they don't use their mind so effectively. They are not using, they use the analyst, they hire the analyst and use the analyst to tell all others and ask the analyst to give their opinion, okay, whether euro has to go up or come down. The analyst may not be knowing that the boss is a player in the market. Then the analyst will say simply that, yeah, there is a great potential, euro has been consolidating here, it is expected to come down technically, and it may not be able to breach the strong resistance level of 1.3770. That is how we could give. Then the player will straight away take against that. So that is why you come across, whenever the analysis, we try to do it and try to take the positions, and you come across surprise moves happening in the market. So the players know what the tool the traders are using, but they don't use such tools. They only use the sentiments. So they create the bearish sentiment and act against the traders and suddenly rise the market, telling that risk appetite suddenly emerged or risk aversion suddenly emerged. They can use it's a currency war at the current situation. So because of this, the currencies are not falling, and that is how they have been telling it on Monday. The Tuesday they dropped it. So if you try to believe all the stories, then you will get really the confusion and the uncertainty in the mind and never be in a position to take position freely. So we use their own reference now levels and try to take positions accordingly. And we don't mind accepting a small loss of 30 pips, and in case if our study goes wrong. So accepting any small loss is always better than struggling with a big loss trading without a stop. So keep that in mind. Now with regard to the initial high, 1.3932 was the initial high, and currently euro is hovering around that particular level. So let it go above that and stay above there for more than 30 minutes. You can take a buy. Otherwise, you can use the lower level as a reference and say, okay, they are just holding around that of 1.3931, currently 3933. So they are holding around, so they do not want to drop, and the net change is also 12 pips positive. So we can try to take a buy position. So this is how we have to review it in relation to that of the initial highs and the lows set. Then in the case of, I explained during the European session, they breached the high and came up to 1.3971, and then they came down and breached the low also and formed 1.3858, and currently they have come to that of 1.3932. So you can understand that it is not that the market looks bullish, so you can try to do a buy and sell trade. And during the rise, if you try to take a buy position and if you fail to book profit, you can incur loss. So that is what you always come across. In a bullish market, not all the bullish traders are going to make money. In a bearish market, doesn't all the sell and buy traders are not going to make the money until such time or until otherwise the traders really understand what is happening in the market and try to trade without any bias. Then, in the case of GBP, 1.5694 was the initial low, and subsequently they breached during the European session before the data release time. 1.5659 has become the new low and currently holding around 1.569397. See how they are nicely holding it here, you can understand. They breached the high briefly in the case of GBP 1.5732 to form a new high 1.5748, and again towards the close of the European session they went up to that and then dropped again and breached the psychological level 1.57. All these things they are doing it mainly to handle the Euro GBP cross. I think they would have seen a lot of short sellers in the case of Euro GBP, and that is why they gained about 100 pips from that of 0.88, and now they are waiting for the short sellers to do the short coverage, and gradually, because it's weakened, they will also offload their positions. That is why I suggested a sell and buy trade. So leisurely we have to watch and see where they are consolidating. Have they finished all the upward stopment? Then subsequently if you try to take a sell position, then you will be able to earn money. It is not always necessary that we cannot do sell and buy trade in the market. We can do it, provided we understand what they have done. Have they finished trapping all the short sellers and they are only inducing the traders to take long and not rising it further up? And so all the traders turning long will be really worrying whether they will be able to make money or not. At that situation, you can do a sell and buy trade also. So we have to read the intentions of the players, whether they are doing an upward stop or a downward stop. Now you have seen that during that of the Japanese session, they made the upward stop in Euro and GBP, and during the start of the European session, they made the downward stop in Euro and GBP, and then subsequently they are holding above that of the initial high lows. So there is a great potential they wanted to rise it up. And in the case of CHF, 0.9713 was the initial high, and I was telling you that 9720 we can buy. They filled it, and still they are not come below that, and now you come across 0.973033. You can keep stop at entry or wait to book some profit there. As I explained that Euro, they are showing 22 pips positive net change, and CHF, USD CHF, they are showing 53 pips positive net change. You can understand a typical contrarian move. That is why I always say that don't imagine or simply look into the chart and say that gold is dropping, so there could be a great possibility Euro and GBP are going to drop, or Dow is rising, so there is a great possibility of Euro and GBP to rise. If we try to correlate the markets, they are not at all correlated. They are totally different market, different players and different type of traders. And if you simply look into the chart without understanding what sort of similarities they have, and you come across that they have been rising gold and they have been rising Euro and GBP. Now they have dropped gold and Euro and GBP have recovered all the dropped levels, whereas gold they dropped it from 1,345 to 1,320, whereas Euro and GBP have gained back the last levels. So this is how they do it. They induce the traders to simply refer and correlate the markets. If you desire to correlate that way, you will be always try to find some sort of correlations. It is something like looking into that of the Chinese people and say that all the Chinese look similar. What is that you are going to achieve out of that? Probably you can recognize they are all Chinese. But if you ask any Chinese, will you be able to recognize your friends? They will be able to definitely say, yeah, he is so and so, the other person is other person, with the names. So you have to understand that this sort of comparisons, and if a foreigner looks into a Chinese and they simply ask, are you brothers? Thinking that they look very similar. And they may not be brothers, they might be simply friends. And if you try to correlate and try to find out the pediology or what is the pedigree in which they come from, and is there any relationship, and probably in the ancestral level, if you start digging into that, you will be simply wasting time. So this is what you come across the analysis are being done, simply superimposing the charts over the other. But you have to understand the players can just act against such sort of correlations, and it is not a guarantee that they can always maintain such correlations. When the players are not willing to correlate, why we unnecessarily correlate and confuse ourselves? Then Australian dollar 0.9774 was the initial low, and they breached it, formed at 9759, and also the high 97.92 was the low high, and they breached and formed 98.52 as the high, and currently trading around 0.9803. So you find that they are holding above that of the initial high. So I am trying to explain to you, before taking the position, how you have to really decide using the initial lows and the highs. What they have done it, they have gone above that and made a little bit of upward stop and for the short sellers, and then dropped in order to trigger the stops of the long holders, and now they are gaining it. So as I explained, that just because the market is bullish doesn't mean that all the buyers will make profit. So where we have to buy, we have to analyze it, what they intend to do at a given time. So at a given time, there could be a possibility for a buy and sell trade or a sell and buy trade. So you have to find out which has got more probability by identifying the type of moves that I explained it in my trading system webinar. If you follow that, then you will find it easily that they do it always in a sequence. So if you follow the sequence, the stop ends, then followed by false move, then followed by extended move. So we could come across the extended move in this particular session. They had done one extended move during that of the European session. Then afterwards, a little bit of volatile move because it is being Friday. They have to hit the stops for the fresh traders of those who are trying to take the long positions or those who are carrying it to that of the next session. So because they took euro to 1.3963 and suddenly somebody might have just gone in for a breakout trade without keeping a stop, you would have just seen that 1.397 was the high and started dropping. So you will immediately try to close the buy position. Later on they will continue to rise. So this is how they earn. So we have to understand their earning methodology and try to follow and trade tactfully. In the case of Canadian dollar, 1.0258 was the initial low, and they've gone below that 1.0226, and then subsequently, in fact, they made a drop to 1.0235 during that of the European session. They made the rise also to 1.0300. Currently, you can see they have not breached the high afterwards, but subsequently they breached the low of 1.0235 and gone to the current low of 1.0226, and subsequently you find that they have come above that of 1.0258, and currently you find that it is closer to that, one pip short of that. So once they come in, you will come across that it is also expected to alternatively gain the levels. So you have to identify which currency is giving a very clear picture for you to trade. Not all currencies you need to take the positions. Whichever the currency majors and also the commodity pairs, you just see, and also see whether a cross is making an interesting move. And in case you find that they are doing a contrarian move, like euro is rising, CHF, USD CHF is rising, you can simply take a buy position in euro, buy position in USD CHF, buy position in euro CHF. That way you can take a decision and just earn money. So the money is not going to say that in Euro trade it was earned, or the money is not going to say it was earned in CHF trade. So money is money, it is convertible. So you have to aim for such profit without having any sentimental attachment to any currency pairs. You can do buy and sell trade or a sell and buy trade. Once you identify how exactly they are handling the currency at a given time, so that whether you have to do a buy and sell trade or a sell and buy trade, you will be able to judge. So now we see clearly that they are holding it, not making any big moves in Euro and GBP, about 20 minutes over from the start, 26 minutes over from the start of the webinar. So we will try to, so I just explained how these initial lows and the highs are to be used in taking decision. So I'll come back to that of the other PowerPoint presentation. So you need to understand the session timings, and every session you will come across initially a volatile move and either a rise or a drop. So from the volatile move you have to identify. Here afterwards the volatile moves will be very, very common, and because of the thin volume condition, as I explained, the leverage is reduced. Obviously the traders will not be able to take the positions what they have been taking earlier. Suppose somebody is taking about 5 to 6 lots in a given time in the earlier condition of 100:1 leverage. Now you will find that you will be able to take only half of it because the leverage is reduced. And similarly, in the case of crosses, you will take only 1/3 positions. So obviously you find that there is a variation with regard to their participation, and you can understand that from that of CEO blog, that how many accounts are active in various leading forex brokers, FEM, and you find that not that the accounts are in billions or millions and things like that. There are a few thousands, and that too active accounts. We have to see how much of usable margin or equity is available in those accounts is very important. In such a situation, when the traders' numbers are very, very nominal with regard to each broker, then if somebody says that it is a $4 trillion market, nobody will be able to manipulate, you can understand what sort of non-related information they are trying to give it. 4 billion might be the thing with regard to all the currency transfers all over the world. Somebody might be sending it for the exports and imports from one part of the world to another part of the world. And when anybody is sending US dollar, for example, from one country to another country, it has to go through the US banks in US and it will come back. And such conversions are being also taken into consideration on a daily transaction. In any bank you go, you will come across that they will be handling in millions. It doesn't mean that they are all trades. They are all actual currency conversions based on the needs of the exporters and the importers, etc. And they are not being traded. That means it is not being used for buy and sell, sell and buy, that sort of trades. And they are not actually leveraged conditions. And you know that most of such traders or the currency converters, they go in for a forward cover. So anybody is making a shipment from Japan, for example, to US, and he will be very, very wise of taking a coverage, forward cover for the Japanese yen, so that whether it is dropping in a big way or rising in a big way, he is not going to be affected. Whatever the cost, he is going to be assured. So he takes the forward cover. So all those transactions are being taken into consideration, and they say 4 trillion. But it is not through the brokers such volumes are being traded. You have to understand that. Then you come across with regard to the timing, the Japanese session, European session and the US session, the players make the active moves, and after the changeover from that of the daylight saving system to the normal standard timings, you'll find the session timings will vary, and they are being explained in my trading system webinars, And anyhow, from the start, by end of this month and 7th of November onwards, I'll try to give the new timings to be followed in that of the market to track the players. Now the basic trading strategy, watch the forex market in all 6 pairs, the 4 majors and 2 commodity pairs for the 30 minutes from the start of the session. How they intend to do, you will be able to understand. And if they are not breached the high and near the high, you can do a sell and buy trade. And if they are near the low and you can, if not breached the low and gone below, you can do a buy and sell trade. Now currently you come across their in between level. So for that, what you do is we refer to that of the initial lows and the highs they set it. And there are many people who ask the questions, can we take into consideration the current lows and the current highs? No, you know that at the end of the Japanese session, they breached the high and formed a new high. At the end of the European session, they breached the low. At the beginning of the European session, they breached the low and come up. So if you look for the market to come closer to that of 1.5838 in the case of Euro and 1.5659 in the case of GBP, it may not happen. Then you will not be in a position to do a basic trading. So always the initial lows and the highs are very important for you to trade in all the 3 sessions. Then whatever may the mechanism of your understanding of the market, there could be an element of error in our decisions. So always keep stop of 30 pips. Whatever the amount of loss is bearable, you try to keep the stops. It is not a hard and fast rule, you have to keep 30 pips. But how much of loss you will be able to absorb without changing your mindset, that much of stop you keep it. But many of the people not willing to accept even 5 pips loss. So what they do, they don't keep stop at all and start searching all over the web and the internet and asking various analysts, see, I am losing so much, I have got so much of positions, I have taken so many positions, will you give you suggestions? That sort of questions come in. Why? Because they are not planned it. So always plan before taking a position rather than trying to do the crisis management after taking the positions. So that means you are not still controlled your emotions and you are not taken the ideas of trading based on your decisions, rather they are all emotional decisions. So avoid that. I elaborately explained in my trading system. Please go through that. Then you will be able to understand how we can control such emotions also. Then once the position makes profit, however wise you might be, try to keep stop at entry. Because you know that volatility in the market is gradually increasing. If you fail to keep stop at entry, you may think that if I keep stop at entry, they may hit my stop and go up. Doesn't matter. If they hit your stop and go up and it does not come back again, you understand, fine. Okay, they are not going to drop below that. I can even take it at a higher level. So whether you buy Euro at 1.3941 or 1.3889, it does not matter as long as I am able to aim for about 50 pips or 60 pips profit. So that 50 or 60 pips profit is more important, not that where exactly I entered into the market. Nobody is going to give you a reward just because of the lowest level you are entering into that of the market and taken the trade without a stop. And in case if they suddenly drop like Tuesday, then you will be blaming yourself. So always make a systematic approach to the market and don't think that in a bullish market a buy and sell trade will be profitable all the time. Then once you keep stop at entry, you can remove the hedging order if the hedging facility is available. Otherwise, you can use the cross for the hedging. You identify based on the net changes they make, what is the cross you can use it for hedging. From time to time, it will vary. So, for example, normally people when they take a buy position in the case of Euro, they try to keep a sell hedging order in the case of CHF. But if they make a move of today, rising Euro USD as well as USD CHF, then you will find both the positions will start making losses. So you have to understand from time to time, don't have a hard correlation always thinking that when euro goes up, CHF has to come down. Many of the people have asked in the blog also, when euro is so strongly going up, how do you expect CHF to come down? That is what many people have asked the question. Now they will be able to see that they are showing the net change and they are slowly gaining the levels in the case of CHF. My buy position at 97.20 is making profit of 20 pips now. I can keep stop at entry. Are you able to understand? Euro is also gone up to 39.37. I explained that you can take a Euro Euro CHF buy position. It was around 66 pips net change earlier. Now it has become 108 pips net change. It is not that I have to take a position and show it to you. I can demonstrate to you how they are handling it. By looking into that of the net changes, you can understand that what they intend to do and plan your trades accordingly. Keep an open mind to that and don't give importance to that of the data release or the market sentiments, etc. There comes the biggest problem because they are distractors for you. And when you give more importance to such distractors, obviously you will find that you are not able to convincingly take positions. And by the time you take the position, market started reversing. Then many say that I used this particular system, I used other system, and nothing is working out. It is not the fault of the system, it is the fault of your mindset. There comes the problem. Because many people do the technical analysis. They do one analysis, hesitate because last time I used it and I was stopped out. So let me go in for another confirmation, then use another type of analysis. Okay, probably I'll go in for a 4-hour chart and I'll go in for a daily chart or a weekly chart or whatever it is and try to use different type of moving averages and try to use MACD and other things, RSI. Finally, try to find out the divergence, etc. By the time you take the position, you find the market started reversing in the other way because you have taken all the time in analyzing rather than trying to see the price action and entering into the market and quickly grabbing the money. So, please identify where exactly you are spending time. Probably you might become an expert analyst but may not be a good trader at that time. So once the position makes profit, decide upon the exit also. The exit is equally important. Depending upon the momentum in the market, you have to see whether it is possible for you to maximize the profit of 100-150 pips or otherwise probably stop out at entry or probably be happy with 10-15 pips because when the move is not very good. So you have to take a decision depending upon the momentum, and if you are not able to take and you become impulsive and nervous, simply keep stop at entry or keep about 2 pips above that of the entry so that 2 pip profit will be assured and let them make the move whatever they want and keep a limit also. Let them fill your limit or the stop so that you are not incurring any loss. You may have a minimal profit or a maximum profit. In case the trailing, stop has got a trailing facility, you can trail the stop 30 pips from the other market, and as they rise it, you will be able to see that the trailing stop also moves and maximize the profit. So this is how you should be able to take trading decisions. That's very important. So in this US session, Euro and GBP are expected to swing and rise for weekend. This is the forecast based on the algorithm. It is only a guiding factor and we have to do the market reading, and with all those things still an unexpected thing can happen in the market, so use the trading strategy. So when I give it in the blog that okay, these are all the expected moves, that I cannot dictate to that of the players that this is how you have to make the move and make my forecast coming 100% true. I am an ordinary person. The players have got their own ways of handling the market. So I can only read the market to a certain extent based on my algorithm and also using the market reading technique. And still the players can act against. Keep that in mind. Hence, I always recommend along with that the trading strategy of using the hedging order to limit. In case if you use the hedging order and the facility is available in the trading platform, then I explained to you how to come out of that hedging by keeping stop at entry or trying to book profit in that. I shown it in Canadian dollar USD CAD trade, that how I booked the profit and subsequently kept the hedging order below that and trailing it upward. So that is how you should be able to trade using the hedging. So let us take a decisions with regard to the trading, what currency we can choose. Already it is about 14:40 GMT. So hardly I have another 5 minutes to go. Probably I'll just give one trade call or two trade call, or the pending orders I'll just handle it. In the case of CHF, 97.59 is the current level, 97.76 is the high. So you know that we have to see it has been trading above that of the initial high and now come closer to that of the high. So when they come to that high and not cut the high for more than 30 minutes, that means they intend to make a false draw. So at that time you can close and re-enter into that of the market, the exit strategy. So I have a buy position, 0.9720 with an entry stop of 30 pips, that I am carrying it from that of the European session, and that position is making profit. It has come to that level of 97.55, 97.58, 97.76 is the high they set during that of the European session. As I explained, that they breached the initial high and gone up, and they come closer to that of the initial high and they are not gone below 97.13 and they are gone up again. So you can read their intentions by looking into that of the red and green orders coming in. Probably I'll show the live market code page and explain to you so that you'll be able to really understand what they are trying to do here. Okay. Now in the case of USD CHF, 97.55, 97.58, you come across it in green, and the quote is showing 79 pips positive net change, and Euro is showing 6 pips positive net change. And I was explaining earlier 108 pips in the case of Euro CHF. Now it has become 112 pips. So gradually they are gaining the levels. Now you have to refer to that of Euro CHF, you have to refer to that of USD CHF, refer to that of Euro. As long as they maintain the positive net change in all the three, continue to watch. Don't be in a hurry and max it. Just close it with a minimal profit. You can use a trailing stop or keep stop at entry or keep stop to protect about 30 pips profit or 20 pips profit around 97.40. And see how exactly they are handling this particular high. Similarly, the high in the case of Euro, the high in the case of Euro CHF. When any of these, if they breach, then watch for 30 minutes. If they are not coming below that of the initial high, you simply hold and maximize the profit. So nobody need to tell you that market is going up or coming down and things like that. You yourself can understand. It does not require any of a sophisticated statistical analysis. It is your own observation. So I'm just showing you one example. So in a currency in which you are interested, you just see in a focused way. The other currencies you can just casually watch, see how far they are creating the sentiments. So in the case of GBP, they are keeping it 19 pips in negative net change, and Euro they are showing about 5 pips, 6 pips positive net change. So Euro GBP they made an upward stop and 88.87, they are not breached above that of 89, and they are holding around 88.77. And I know this was the initial high, 87.77, and 4 pips below I kept a sell limit order, 88.74. So now you can see slowly how they are tipping it. How they gain the levels in the case of GBP and hold the level in the case of Euro. As a result, you find Euro GBP is doing small swings here. Then later on, you find 15 pips positive net change. Initially, at the start of the European session, it was 0.0000 net change. They gained about 15 to 20 pips, and slowly you come across it is becoming red, and you don't find much of a follow-up move. They show green, 88.77, 88.80, but you don't come across 88.78 and 88.81. See, 88.76, 88.79, red, then 88.77, 88.80 they show. So this is how they make little more dip. How this can be done? By making a small dip in the case of Euro, making a small rise in the case of GBP, they can do it. So now you find red, still lower. So this is how they handle it slowly. So this, if you watch it, you'll be able to understand that what sort of trade you can do it. Whenever such quick moves happen, then follow it and take positions and keep stop at entry, so that even if our reading goes wrong, you will not lose any money. That is very important for us, by keeping stop at entry, so that we use the market reading, we use the forecast as a guidance. I am giving it free of cost in the blog in FX Street, so you need not even search for it. And then I explained in my trading system the trading strategies. So make use of all those things and objectively trade. That is what I am trying to do it. Rather than simply asking about 10 people, say that everybody says that, okay, Euro has to go up. So out of 10, 8 people have said that Euro has to go up. And if you simply take the buy position in Euro, it may not go up. Because you don't have your own ideas in that. It's all somebody's borrowed idea. So I will just now take up the questions, because hardly I have any time. I cannot delay it further. If there are important questions, I'll answer those questions. Okay. Then Max, do you see Euro and GBP going higher from here? Why do you see USD CHF coming days? As I explained that they wanted to make contrarian moves, and physically you can see that how CHF they have gained 80 pips, and in the case of Euro they are still showing positive 4 pips. So this sort of contrarian moves, when I come across, you can understand. Today they wanted to rise Euro and CHF. They will not change the trend suddenly in a particular session. Between sessions they may change this trend. Then what level Euro GBP, Euro USD go up? So all questions are pertaining to the trade, not willing to understand or not willing to decide on their own. I explained that the high and the lows, how you have to view it. Currently they are handling the crosses. You may have to wait for them to gain the levels in the case of Euro. So, see, I will not be able to say, okay, they can rise up to 1.3970. It is not possible for anybody for that matter. At a given time, whether they are going to rise or a drop, we have to follow the moves, what they are doing. At the moment, they are doing only a consolidation. So how can we determine the level? When they start gaining the momentum, then probably we can estimate what level they could go. So without understanding, without learning how to decide, and you expect somebody to think and decide, okay, it can go up to 1.41, then simply follow it and later on shout at him and say that, no, you said it will go to 1.41, whereas it has come to 1.37, and show all your anger against him. What is the use? You have to realize it one day or the other. Then Rooney, do you think G20 meeting going to make any wild move? No, not at all, sir. See, these meetings are happening very frequently. It is not something happening rarely in the earth. Very frequently they discuss, very frequently they have the closed door meetings, etc. You know, the politicians, all the closed door meetings, they have got some other personal agenda to discuss rather than trying to improve the economy or anything like that. So the players will continue to make the market moves as a surprise, and probably they may just make a knee-jerk reaction briefly if needed, for any announcement and things like that. Later on, they continue to make their own moves. So, any of these political people, if you think that they will come for rescue of the market, you will be waiting forever. The new high for day is EURUSD was made during the pre-US gap time. If gap time move is false move, yes, they dropped it first 30 minutes. If the gap time move is a false move, they first 30 minutes they dropped. They dropped it, and now they are holding above that of the initial low. So throughout the US session, they are not going to drop it. Please read it properly, sir. Then Bola. Does it mean that because we are holding the high in USD CHF, we should be looking to go higher? For the day, it will go higher. The next day, we have to see how the traders are entering into the market. They will try to make a false move, and then they will continue to rise. The long-term move is up in the case of USD CHF. That's what I explained. But in between, they will make up and down moves. You have to recognize that and take your trading decisions. Then if they do not rise GBP today, what can we expect on Sunday night? They are expected to, on Sunday night and the Monday, they are expected to make an upward gap opening and continue to rise during the Japanese session. All will be wondering that, see, I was holding the long position, they are not rising, I am afraid because G20 meeting is there, so they might suddenly drop Euro and GBP on Monday. So they will close all the positions, but the players are holding at a higher level and absorbing all the sells. And they are not gaining the levels, but after buying at the highest level or close to that of the high, they will try to open higher and try to rise, and automatically the traders will come and buy it from them. Later on, they will try to make the volatile moves. So they know how the traders can be trapped. It is something like taming a dog, The dog tamers, they know very well how to handle the dog. They just do it very nicely as if they are friendly to that of the dog and try to train it. So the same way, they know the herd of traders, how they behave, and they read their mannerism and they read their trading psychology and act against it very simply. Because they were also traders initially, and by fortune they have become players. If the price is say 40-50 pips above initial high in say US session, what should be the observation? What should be the observation? So I explained that initial lows and the highs are to be referred to in order to take positions. Then Abel, what is the projected move for the US session? They are expected to rise. That's what my algorithm says, and I displayed it in the slide. Then what session Asia? So you can call it by any name, but I call it as a Japanese session from 0030 to 7 GMT. You can call it as a Asia session or session 1, session 2, session 3. The name is immaterial. Ultimately, what we are able to perceive as far as the hidden agenda of the players are concerned is more important. Do you expect a further Euro USD pullback? In the small dips might be there, but they are holding above that of the initial low. From the start of the session, they have been holding it, so there may not be a pullback down, but the rise will take some time because they are handling the crosses. They find the crosses, they are able to earn more money. So they are focusing on it. So you have to understand that because we are holding Euro position, they cannot suddenly jump into Euro and rise and give you a profit and shake hand. Understand that wherever they are able to earn money, they will try to focus on it. They are traders. Then Hardy. Trading consistently and successfully is like discovering how to make a light bulb. It is not that difficult, sir. According to me, it is a child's play. Once you understand the trick of the trade, and you do it very nicely, like a professional pickpocketer. Initially, you might be struggling to do that, snatching the things and things like that. Later on, they do it at ease. So any art or any skill set can be learned by habituating to that with the motivation, with the interest. So trading, you try to develop the interest and get the motivation and read what the other man is trying to do. Then you will be able to really read it well. It's not difficult. So say for example, when you have got accustomed to a person and acquainted with a person, later on you become so close friend. You are able to understand his likes and dislikes. Don't you? The same way, if you habituate the association, you will be able to get it. It is not something very extremely difficult task. I see that the USD CHF is at different range. Is this the indication that the USD is on the other way up? No, you always keep it in mind that no currency they will make it as a waste paper. So simply analysts might say that USD is just losing all its strength and things like that. The players are very, very clever. They make USD stronger against the denominator currency and make weaker against the numerator currencies. Why? Because they keep all the reserve in US dollar and they are using it to give that margin for their tradings. They cannot simply take the position. They also need to give margin. That is why all cannot become players. Only those who have got very high volume of free cash, they will be able to, or the cash which can be used for taking risk. Such people can only become the players. So players are not born, they are created by circumstances and their associations. The Forex live code page, does it reset at the start of every day? Yes, it resets. Is GBP still expected to rise? I am expecting GBP to make a very strong rise, and the only thing is, it is a question of time. In order to drop Euro GBP after finishing all the upward stockment, they are expected to hold Euro and rise GBP in a very significant way. But it is a patient testing game, so we need to understand that. Or make little more small swing trades until such time you are able to get the fortune. How does the net change improve our decision making? I have been all along telling that net change is nothing but the current market level in relation to that of the previous day close. So now you find Euro is 17 pips positive. From yesterday US session close in today's US session, Euro has gained only 17 pips. You can understand they are making a thorough consolidation here, buying all the sells. They have made a little bit of stop-ins and they are buying it here. It might appear that they are selling, but they are buying it here, holding at the higher level. If they are selling or if they have sold it, they could have just started dropping from that of the later part of the US session. Understand their moves. That is what again and again I am telling. Understand the type of moves. Then you will be able to easily track them. And Robert, you expect that Euro USD will drop further. I am expecting them to go up. You are asking the opposite. Do you expect GBP to drop further? All are asking the same. No, I am not calling anybody as a dog, sir. I just given an example. If I hurt anybody's feeling, I am extremely sorry about it. Then Rob, I missed your answer. If GBP to not rise in this session, what is expected? I explained in the Japanese session they are expected to open higher and take it higher to that levels. Then Rob, the reason I say that you might left last week of the month, not mid. Then Bola, do you have a book on your? No, I don't have a book, sir. I don't find so much of content to or stories to write a book. I find what is essential. I already discussed it in my trading system webinar because I do not want to beat around and say so many things and present it as a form of book, and that is not my intention. I wanted to help small traders. Then John, so I meant does not reset it every trading session. Yeah, they just reset it only during the start of the day, not every session. Do you think that Better to buy GBP or sell Euro GBP? Yes, that's what I recommend. But still, you do your analysis and confirm it. Don't blindly go by somebody's words. Do you see GBP USD dip to 56 today? No, they may make a small dip in order to handle Euro GBP, but not a very big dip. So, if you have uncertainty, try to keep hedging in order to limit the risk. Or stop. Is the Australian dollar CAD headed back to parity? The Australian dollar could reach closer to parity, but Canadian dollar is not expected to. They are expected to make it the other way move. Because that is the last currency to be handled in an extreme level. All the other currencies have been handled extremely. So I'll go back to that of the PowerPoint presentation. Sorry, I only just carry forward the trade from that of the European session because of want of time. But I explained more with regard to the trading decisions. I thought that is more relevant to that of the traders rather than simply showing that I am making profit. That is not my objective. Understand the concepts well. So I don't have time to explain more about the advantages of hedging, and they are being displayed in my trading system webinar as well. You can just go through that. So I take this opportunity to thank everybody who have come here to listen to my talk. And I thank FX Street on this particular occasion. And in spite of the 10th anniversary, etc., still FX Street, the professionals, they have taken time to host the webinars as per schedule and just nicely taken care of all over the people, people who come from different parts of the world to continue listening rather than focusing in Barcelona. So I should especially thank FX Street and wish all the best for the FX Street team to come up with much more colors in coming days. Thank you one and all. Thanks for your patience. See you again on Monday with Asian Session Live Market Analysis webinar. We'll continue to analyze the market as usual. Thank you. Bye.